name is Kalisat Madewantari. I am from Accounting Department, Faculty of Economy and Business, Mercubuana University. I will explain about financial statement. Financial statement and ratio. Statement of financial position, notes, annual reports, budget. Number 2, balance sheet, statement of cash flow, statement of earnings. Number 3, market capitalization, discount, cash flow. Number 4, management account, investment statement of shareholder equity. Did you know? In the UK and the USA often have different terms for the same thing. Here are some important examples. Can you think of any others? In the UK, balance sheet. In the USA, statement of financial position. In the UK, profit and loss statement. In the USA, statement of earnings. In the UK, shareholder. In the USA, stockholder. In the UK, stock. And in the USA, inventory. In the UK, gearing. In the USA, leverage. Next, statement of financial position. In statement of financial position, asset, the part of current asset and non-current asset. Current asset, cash and cash equivalent. Trade receivable, contract asset, inventories, and other current asset. Number 2, non-current asset. Non-current asset, investment accounted, other financial asset, property, and plant equipment. Liabilities. Liabilities, the part of current liabilities and non-current liabilities. Current liabilities, bonds, borrowing, and lease liabilities, trade payable, other current liabilities. Number 2, non-current liabilities. Net definite benefit liabilities. Equity, common stock, capital surplus, retained earning, accumulated other comprehensive. Statement of earnings. The main categories that can be found on statement of earnings include revenue, cost of goods sold, selling, general and administrative expense, marketing and advertising, technology, interest expense, tax, and net income. Stockholders. The roles of parties who have primary interest or stockholders in business organization or income are as follows: owner or shareholders, employee, creditors, supplier, customer, competitor, government. Next, inventory. Inventories are stored materials or items that will be used to fulfill a certain purpose. Every company that carries out business activities generally has inventory. Function and purpose of inventory. The company for fluctuations in demand and provide an inventory of goods that will give customer a choice. This kind of inventory generally occurs at release. Main couple or spare part, various parts of the production process. For example, if a firm's supply fluctuates, it may require additional inventory to decouple the production process from supplies. The advantage of quantity discounts because buying in larger quantities can reduce the cost of producing or shipping goods. Leverage. Type of leverage. In general, there are two types of leverage. These include the following: operation leverage. According to Hanif's opinion, operating leverage is the amount of company funds used for operations. Meanwhile, according to Ibnu, the meaning of operation leverage is the level of the company ability to use fixed costs. Financial leverage. The meaning of financial leverage, according to Hanif, is an asset source of funding that has fixed expense. This is accompanied by a submission so that it can provide additional benefit in an amount greater than the fixed cost so that it can increase profit or profit for sale. The benefit of calculating the leverage ratio for creditors include 1. In order to find out the company position on all its obligations to external parties, especially for the capital provider or creditors. Number 2. Can be used as a benchmark for assessing the company ability in the company able to fulfill its obligation or not. This obligation refers to the return of the source of the capital fund and its interest. Number 3, can you know the balance of asset value with capital, especially in fixed asset value or fixed cost. Number 4, to assess the influence of the source of loan funds that have been obtained by the company on how to manage this source of funds. Number 5, to assess the amount of assets of the company that has been financed by creditor. Okay, I think enough. Thank you for your attention. Goodbye.